Welcome to the Daily Update, where I'll go over the action in the market for Friday, November 10th, and then we'll see how things look for Monday, November 13th. Kind of out of nowhere, we had a pretty solid up day after a pretty boring week, Monday, Tuesday, and Wednesday, where we just went sideways. In Thursday's session, we went down. Well, in Friday's session, we came back up. On the positive side, we are above resistance. We closed just above that. So that's going to help the daily charts as well as the weekly charts to show some improvement. We are overextended to the upside, but we potentially have some positive seasonality coming in the early part of next week. So we'll have to see. Can the market get some legs and continue to go up? Now, one thing to be aware of, we're still below average with volume. So on a down day like we saw on Thursday, we were lower with volume. And then on an up day, we were also lower with volume. So the market isn't really convicted right now about what it wants to do. Let's go back and talk about what happened. Right at the open, we had a gap higher open. We were above the daily pivot at 43.62. Then we fell back below the daily pivot. Very common. We tried to fill that gap. As the day went on, prices rose back above the daily pivot. We got above R1 at 43.79, even above R2 at 44.11, and we closed pretty much at the high, and we were above 4,400. So we've recaptured another round number. We were up 1.56% on below average volume, and our technicals were still positive. We never switched back more to negative. There were some warning signs, just like there are always warning signs. But we are looking a little overextended to the upside, but these indicators still have more room to run if we decide to go up. Inflation, interest rates, growth concerns, what's the Fed going to do? What are they going to say? That's kind of in the background. And then geopolitically, we're still keeping an eye on what's going on in Israel, as that tends to be escalating and lasting for a longer period of time. Some comments. Mega caps and the semiconductors, they led the market higher. These are the big stocks. These are the stocks that really have held up the market in 2023. Well, they did the same in Friday's session. Oil was up to 77.17 or $77.17. We're kind of out of that range now where oil is really freaking out the market. So it's not having as big of an impact as it was a week or two ago. On a short-term basis, we don't have a very long list, but we still have a list nonetheless. But it's our usual suspects, the really touchy short-term indicators that we follow, the Stochh RSI, the Williams percent R, and the stochastics. Intermediate term, that CMB composite is still extreme negative. This is interesting because that's usually an indicator that doesn't stay extreme for very long. Well, it's been hanging out there for 3 days now. We're getting a little extreme with our standard deviations chart. We're going up into the +3 area. The PMO studies and then the rate of change 10. That was on the list before. The current scenario is that we had been thinking that the economy was stronger than expected. Now that's being thrown into doubt, but we want to watch that balance because good news has been bad news and bad news has been good news. But at some point, if it keeps leaning in that direction, the shift will become bad news is actually bad news. We're not necessarily surprised that the Fed will keep rates higher for longer. That's been on the table for quite a while. What is a variable is, are they going to raise interest rates? And right now, that does not look likely. So are they actually done raising interest rates? Still waiting for some economic data out of China, keeping an eye on Israel. Oil, which is not as big of a deal right now, but that could change at any time, and then earnings as they are released. The dollar was down and interest rates were down. Not very much for either one of these, but they did give some support to stocks. The 10 to the 5 has gone back to being inverted, as well as the 10 to the 2-year and the 10 to the 3-month. Sentiment ticked up just a little bit. We're at 42. So we're still negative overall, but we're showing a little bit of an improvement where we had been at 41. Our trend is still positive. The green line's on top, but the ADX is below its moving average. So it's a weakening trend. However, they are still both above 20. So we are in a trending environment. Our bias is positive with the up day, and our momentum continues to be positive. We only had the consumer sentiment come out in Friday's session. It came in less than expected at 60.4. They had expected 63.7. I have a few charts to show you. Last time it came in at 63.8. Here is the chart from briefing.com, where the blue line is the total. That's the reading that we have in the next chart that I'll show you, where we're seeing folks getting more pessimistic here. Their expectations looking forward are also going down, as well as how they're feeling right now. So we're seeing a lot more pessimism pretty much across the board. Here is our chart, or the blue line here is the consumer sentiment preliminary reading, where it's going down as interest rates really have been going up. There's still a really wide spread between the two, but that has gone on for quite a while now. And we closed at 4.63%, virtually unchanged. You have to round it up or round it down, but we're still above the 4.02%, which can bite into corporate earnings. Here's the intraday chart where we did gap higher above the daily pivot. Then we came back down, didn't quite fill the gap here, but then we were just off to the races. We went up above R1. We got all the way up to R2, even broke above that, and pretty much closed at the high for the session. Growth and value pretty much performing the same. We'll have to look at some other charts to go a little deeper into this, but the red line and the blue line both had up days. On a closing basis for the S&P growth to value ratio, sorry, this is a 10-minute intraday chart, we did see growth outperforming value. So we kind of bottomed out here a week ago on November 3rd, where we had a big update, but growth actually went down. We have been seeing some improvement since then as growth has been outperforming, and that's more healthy for the market. On an end of day basis, we were pretty much sideways. We're back up to the 50-period moving average, but growth is still hanging in there and in an uptrend when you compare it to value on a ratio basis. We're also seeing this other measurement of growth to value showing some improvement. We're starting to break out now, and that could also be positive for the market. And then mid-cap growth is also still holding up. It hasn't really broken out yet, but it's been going sideways quite a bit. But longer term, it's still in an uptrend, where even when we were going down with the index, you can see where growth was hanging in there fairly well. It would go down for a while, but then come back up. And so this is another part of the market where we're seeing some internal strength. We're not really seeing that in the small caps. Longer term, they're still in an uptrend, but they've been chopping sideways. Here's the condition of the trend. The black line is the ADX below the moving average. The green line's on top and turning back up, where the red line is declining. So we're in a weakening trend, but we're still in a trending environment, and that trend is positive, and seeing pretty much that same thing in the short term. Keeping an eye on the VIX, where we're starting to drop again with this indicator. So maybe we're in this area more in the middle part of November, where we do see the VIX start to decline more. The Ulcer Index is continuing to decline. It's below its moving average. It ticked down just slightly. And here is the VIX, where we declined on the line chart as well as the bar chart. We're below the moving averages and well below 20. The VIX of the VIX actually declined on a closing basis with the line chart since we had an up day. We closed kind of in the middle part of the bar here. So it's just showing that volatility is slowing down as the market went up. The VIX to VVIX ratio, this might be a little hard to see, but we're starting to turn down here. And that could be positive for the market. This had been going up while we were having some difficulties. Now that this is going down, that could be more positive for the market, but we need to see it continue to go down. And then I've changed this chart a little bit. I took the VIX to VVIX ratio. It's still here, but it's invisible. I'm just showing the moving average, and that is starting to tick down as well, which could be positive for the market. The VIX to move ratio did decline, showing that stocks are showing less volatility when compared to bonds. Now, this is not updated yet. Actually, it just did update, okay? From the time that I was preparing this until I updated the chart, this is really starting to go up. We're seeing a real heavy amount of hedging when it comes to positions, and this is getting to a high level. The fact that this is going up is negative, but the fact that we're getting up to a high reading, at some point we might top out and then start to go down. In the longer term, 253 period simple moving average, still going up, but trying to roll over. It's going to take a while for this to roll over. If it does start to go down, that would be positive. We did see a decrease in this fear gauge, and we're seeing pretty much sideways action with our other fear gauge. The Risk on to risk off ratio, yeah, it improved in Friday's session, but we're not really showing an awful lot of strength yet. The longer term that we look at here, that continues to decline. The advanced decline line based on price, we're back above the moving average. We did tick up with volume, but we're still below the moving average. And this is also healthy, showing some internal strength here. We're seeing a real breakout of the new highs and a real contraction of the new lows, even though both are expanding now. But when you take them both together, our 5 period is going up and our 10 period is going up and starting to cross above the midpoint. We're back above the 0 line with our advanced decline ratio, both with the blue line and the red line. And accumulation distribution, this tries to measure the smart money. We're above an advancing moving average, so that is positive. The chicken money flow, which gave us a warning sign after Thursday because we dropped negative. Now we were able to turn and go back up positive. That's helping to turn the red line back up. This is another smart money indicator. And we were finally able to close above this long-term trend line. The question now is, can we stay above this level? And can we break more convincingly above this downward sloping trend line, this green line that we see here? But a warning sign is, if you look at the bottom, volume was below average, and that is not showing a lot of health. And volume still is dropping off. It's above this line when we look at the oscillator, but it has been declining. And when we're going up on a decrease in volume, that's usually not a good thing. The force index is no longer extreme positive, but it is looking positive in and of itself. The Stochh RSI is back to extreme positive, and the Williams percent are also extreme positive. All of our stochastics charts are extreme in the short term, intermediate short term, and the long short term. And we're still looking pretty extreme with our rate of change going back 10 periods, where sometimes this might mark an exhaustion point. Other times it might just slow things down for a while. And the boom indicator in the short term is starting to go back above 100 now. This indicator tries to measure how far away are we from a moving average. Well, we have a 20-period moving average, and we're getting kind of far away from that now, and price has a tendency to snap back to the moving average. Now, this could still go higher. We're looking more positive in the 50 with the 50-period moving average study. That's not extreme, and we're looking more positive with the 200 as well. Standard deviation declining just a little bit, but is still showing that we've been moving pretty fast, even though you wouldn't know it by this past week, where we were pretty much flatlined for Monday, Tuesday, and Wednesday. And we saw some improvement, and we're closing just a little bit above the moving average with our cumulative NYSE advanced decline line, ticking up a little bit with our regular advanced decline line. And we're ticking back up as well with the other NYSE advanced decline line, but we're still below both moving averages, and we've seen a recent death cross. Looking at our advanced decline line studies, we ticked up with the NYSE common stock. We're coming back up to the moving average with the S&P, a bit of a tick up with the mid caps as well as the small caps. And it's the Swenlin trading oscillator. This has been giving us a warning sign for quite a while now, but we haven't really been seeing a follow through based on price. We've been declining based on price and volume here, and we're actually dropping below 0. Is this flashing some kind of a warning sign? Now, before we got set to go higher, this actually turned up and started to go up. This has turned down and has been going down for a number of days, but price has been going sideways with a real strong day on Friday. Is that something that we need to pay attention to? I would pay attention to it, but I wouldn't base everything just on this indicator. We're still looking positive with the go, no-go system with the blue bars. The TTM squeeze is continuing to show some improvement and turning more positive. The balance of power is above the midpoint and advancing. That's positive. And we're starting to turn up a little bit with our highest high, lowest low value chart. The midpoint is going higher. And now that we've broken above the upper band here for the highest high value, that's going to turn the blue line back up as well. Here's the CMB composite. Even though it has been falling, we're still getting an extreme positive reading. And we're breaking above the 100 period simple moving average. We're finally able to do that. We spent the last number of days chopping sideways in between the two, and the fact that we could close up above that is positive from a technical standpoint. And so we're breaking above all of the plotted moving averages here. The longer we can stay up here, the more these lines will start to turn up. And the fact that we're above all of them is looking more positive. The Erin indicator finally kicked into gear. It flatlined, you can see here, for most of the week. And then it went, wait a minute, something happened. And now we have the green line shooting to the top. The green line are buyers. And so that means that buyers are in control. The red line are sellers, and that has been decreasing. So we've switched back over to positive with the oscillator since it measures the difference between the two. The Ichimoku cloud, we're still right inside the red cloud. Is that going to provide some kind of overhead resistance since we've been coming back up? The vortex continues to be positive with the green line advancing and the red line declining. The ease of movement is looking more positive, above zero and advancing. The bullish percent index, it's been hanging in there and continuing to just inch its way higher. These are the number of point and figure charts inside of the S&P that are generating buy signals, and that is showing more internal strength and a positive sign. It would be even more positive if we could get back above 50. The summation index based on price is advancing, and this was a little warning sign. We were starting to tick down based on volume after Thursday. Well, now we're turning back up and crossing above zero, so that switched back more to positive. With our NYSE summation index, we're going higher based on price. We actually ticked down just a little bit based on volume. And we switch back to positive with the Elder's Impulse system for the S&P. The RSI is continuing to show more improvement. Both the 14 and the 9 period are above 50 and advancing and not extreme yet. On balance volume is still above an advancing moving average. And we're showing a little bit of a tick up with our 200 period moving average study for the S&P, as well as our 50 period moving average study. Momentum, we're still positive. We never switched over to negative. So the PMO is going up, and also based on price and volume. We're starting to get a little bit extreme with the PMOs that are rising, almost a little bit extreme with the buy signals, and we're still turning more positive with the PMOs that are above zero. This is not showing that there was real broad participation. We were flat with the bullish percent index for the NYSE. It's still showing some improvement and bouncing up after dropping below 30, but the fact that we had a pretty solid up day and this was flat is not necessarily a good sign. We actually declined with the NASDAQ 100 bullish percent index. It's still positive and above 50, but the fact that this went down on a good up day, that's another warning sign. With our short-term oscillator, we are looking more positive. The MACD in the intermediate term is turning more positive. All of our oscillators continue to be trending higher. And looking at the standard deviations chart, we're right on the border between the +2 and the +3 standard deviation. That means that we might have gone up a little too far too fast, but we're not necessarily extreme with this reading. The Chaikin oscillator ticked back up after really going up and then falling back. It is still turning back more positive. And the money flow index continues to be positive. We're above 50 and advancing. The ultimate oscillator, which gave us an extreme reading, which we don't get very many of those, it fell back down. It's turning back up and not extreme, at least yet. The Copic curve continues to be positive. The Pring bottom fisher, I don't know what this thing is thinking. It generated a signal back here, which really turned out to be a joke, but it's starting to cross back over. Now, I wouldn't necessarily take this as a solid signal. First of all, we didn't get to a real negative reading, which might have happened back in October, and the market did go up just a little bit, but that buy signal just went away. We're not really seeing any kind of a washout right now in the market. We were chopping sideways, and for this to give us a signal, usually it's after we've been roaring down and everybody's capitulating and just saying, I want nothing more to do with the market. And then when this generates a signal, those are the best signals. But still, the fact that this is crossing over positive is something to be aware of. The parabolic SAR continues to be positive, and we close just above both of these trend lines here. Now we want to know, can we stay above this level? This was acting as some pretty significant resistance. You can see all of the bars over the last week or so, they would top out right at the underside of this trend line. The fact that we could close above that is also pretty positive, and we're just a little bit above this downward sloping trend line. But again, can we stay here? We were up with the Dow, we were up with the transports, we ticked up slightly with the utilities, but the transports continued to underperform the Dow. The transports are also underperforming the Dow here. When we look at the ratio, when this is going up, that means the Dow is outperforming. The transports are also underperforming the S&P. You can see the ratio really took a dive. That's not a positive sign. The Sahorchak is not kicked back into a full-blown buy signal. It's still dropping down. It takes a long time for this to change. The Staples to S&P 500 ratio is declining, which could be positive for the S&P. The S&P to utilities ratio is starting to tick back up after it had been really bouncing around here. When this is going up, that's more positive for the S&P. The 10-day average of the highs minus the lows for the S&P, we're crossing back above 50. So this is longer term positive. And we're back above zero based on price and volume with the 19-day exponential moving average of the advanced decline ratio. And so that is turning this more positive. We're not above 100 yet with the micro caps, but we were up almost 1% on the day. So we're not setting a new 52-week low, but not seeing an awful lot of strength. You can also say we also have a recent death cross here. But the Heiken Ashi, where it was looking a little bit more negative after Thursday, it's switched back to looking more positive after Friday. The Kegi is still remaining positive. The Renko is still remaining positive. The three-line break was trying to turn a little more negative, but then after Friday's action has now switched back more to positive. And we have a new X drawn here on the point and figure chart. No new signal. It was generated on November 2nd, a low pole reversal. But anytime you have a new X drawn in here, that's positive. Now, the point and figure chart does not take time into account. It just counts price movement, and we finally moved enough to warrant a new X being drawn here. The equal weight is still underperforming the S&P, even though both were up in Friday's session. And we're really seeing the ratio breaking out. That means the real mega caps are really outperforming the rest of the market. So that's why this ratio is going up. The Dow is still above its 50 and 200-day moving average. We're getting really close to a cross here, but if we can stay above both moving averages, that might help either avoid the death cross or actually turn, or at least not keep it there for very long. The diamonds have switched back to positive after being neutral. The NASDAQ 100, this is also positive. We broke out clearly above this previous all-time high, and we closed pretty much at the high for the day. We do have some previous resistance that we want to be concerned about here, but this is showing a lot of improvement. The Qs have switched from being neutral back over to positive, and the NASDAQ 100 is positive on a momentum basis with the PPO climbing above zero and above its moving average. The NASDAQ also looking better. We're still above this R1 level. We're above both moving averages and showing a lot of improvement. And if we continue to go up, we're going to have this 61.8% retracement level to deal with. That may act as overhead resistance. Small caps showed a bit of improvement. We came down to this pivot line and then saw some support up off of that, but they're still negative. And we're looking a little bit better. We're right at 50 with the RSI with the small caps for the Russell 2000. We're still working off of a death cross. The momentum is still positive, trying to turn back up after we've been seeing some real weakness here. And here's the small caps for the Elders Impulse system have gone from being negative back over to neutral. The mid caps also bounced up off of this pivot level, but are still below both moving averages and still working off of a recent death cross. They have also switched back from being negative over to neutral for the Elders Impulse system. The FANG index is still hanging in there. We haven't set any kind of a new high yet, but we're well above the 50-period moving average and closed almost at the high of the session. And we're just a little bit above the 8,000 level here for the FANG index. And we broke out above this green trend line here, and we're able to close up above that. So that is looking better from a trending standpoint. In our arithmetic scale, we're getting further above this longer-term trend line going back to 2009. So when we look at the Qs to the S&P, we're seeing some improvement. We actually saw discretionary underperforming the S&P, and it's back down to its moving average, where large cap growth is outperforming large cap value. So with the large caps, we're seeing an improvement. The mid caps are improving, and the small caps are improving according to these measurements. We are seeing a bit of an improvement here with our new highs, new lows study. It's going back up, but we have a ways to go to get back up above zero. But we still remain above zero with the black line, which is our indicator, and that's slowly turning the 50-period moving average back up. But when we look at the broad range of the new highs minus the new lows and take a 5-period moving average, we're still below zero. So that's showing some internal broad market weakness. The dollar was the dollar was down just a little bit in Friday's session, but continues to be in an uptrend. And the financial sector still hanging out above its 50 and 200-day moving averages. If we can stay above this, that may negate the recent death cross that we've seen. We did see yields drop down just a little bit. They were virtually unchanged, but we've been chopping more or less sideways. So based on price, we're still dealing with the 50-day moving average after giving a recent death cross. We're above 50 with the RSI, and momentum is still hanging in there positive. Tom Bowley's research, we're possibly coming back into the middle part of November. Well, that's not possible. That will happen. But is that going to line up here with the positive research that he has uncovered? So what's our outlook for Monday? We're still dealing with earnings season. We're still dealing with the situation in Israel. Our technicals are positive, and we were able to close above resistance. We'll just get the Treasury budget. That was supposed to come out on Friday, but then when I looked at the calendar, they switched it over to Monday. Not a big deal, so you could almost say there's really nothing coming out in Monday's session. And then keeping an eye on all the different geopolitical events and wondering if something's going to escalate over the weekend. Here's the economic calendar for the upcoming week. This is going to be a big week. On Tuesday, we'll have CPI coming out. That's the big inflation report. Then on Wednesday, we're getting our retail sales, which is a huge part of the U.S. economy, and then PPI, Producer Price Index. And then on Thursday, I think this one is important, industrial production and capacity utilization. And then on Friday, we'll get housing starts and building permits because this tends to be a leading indicator of the economy. And then looking at the Stock Traders Almanac statistics, we are positive for the Dow. We're neutral to positive with the S&P, and we're flat out positive with the NASDAQ. So we have some positive seasonality. When you take all the years from 2001 up to 2021 together, we will be on the 9th trading day of the month where we do see positive seasonality even during a pre-election year. And so maybe we're coming into this time during a pre-election year where we do see some positive seasonality. Also, we're wondering if that's what's happening here on this other seasonal pattern chart. And then this seasonal pattern chart also suggests that we might be coming back into some positive seasonality. For the NASDAQ, are we going to bounce back up here? We're getting more into the middle part of November. Is that going to help the NASDAQ? And are we going to bounce up with the S&P? That's the green line in here. And then Bitcoin, well, it's doing okay right now. Here's the chart. It got up into 38,000, and then as the time I took the chart for this, we were down around the 37,000 area, but it's gone back into an overall uptrend and has been making a series of higher highs. So our scenarios, we're not going with the down one because we're just looking too positive right now, but we are short-term overbought, but we have been able to close above resistance. If anything, we would lean more to the positive side. That's what our charts are suggesting. We would not go with the sideways trend because we are still trending, even though it is a weakening trend. The warning signs, we still have the daily special K chart, which is improving, but has not crossed back above the red line. The weekly line, the weekly chart and the daily chart are negative. The longer-term equity put call ratio is going up, but I didn't get any updates here, so I don't have anything. I'll have to either put that out over the weekend or wait until I make Tuesday's video. And the equity put call ratio, because we're getting a real delay with the data, it's really starting to spike up. But that one was updated, so I would go ahead and go with that one. The risk on posture is showing weakness in the bigger picture, but it's possibly showing some improvement. Our new highs, new lows study is negative, but trying to tick back up, but it's still below zero. The Russell, the small caps, and the mid caps are working off of recent death crosses. The financial sector did give us a death cross 2 weeks ago now, but it's been able to stay above both of the moving averages, so it may take care of that death cross. The positive signs on a momentum basis with the S&P and the NASDAQ 100, we are positive. The parabolic chart and the vortex indicator, they continue to be positive. The bullish percent index is above 30 and advancing. It would be even more positive if we could get above 50. Small and mid-cap growth, and I showed you the chart of mid-cap growth. It is positive and hanging in there, where small cap growth is just chopping sideways. So our conclusion, we're positive and above resistance. Are we going to experience some positive seasonality? Of course, it's all speculative at this point. In the short term, we're positive and above resistance, but we have some overextended indicators to the upside, but they could still go up higher from here. In the intermediate term, we're slightly extreme positive, but we're also closed above resistance. We still remain positive in the long term because we're above the 200-day simple moving average. So thank you. I hope you found this helpful. I hope you have a really nice weekend. I will be preparing the weekly video, the intermarket analysis video, and the deep dive video, and I'll get those posted just as soon as possible. Have a great weekend, and I will talk to you in the next video.